Welcome back, baby. It is Friday, and I am pleased to announce we have Jerome Powell speaking live at the Federal Reserve Bank in San Francisco, California. We got some interesting stuff to look at quick, but we don't have a lot of time. It is Friday, and I know you have a choice to be anywhere on Friday. I'm glad you're spending it here with us. Make sure you subscribe, smash the like, join the Discord, discord.gg/Tom Crown. Party never ends there. And remember, Tom Crown is filmed in front of a live studio audience. Anyway, coming in today hot, Fed Chair Powell speaks in just a few minutes here. We're going to start that up. I think in about 10 minutes, the event will begin. However, this is off the back of core PCE numbers coming in today. Now, today is a really interesting kind of macroeconomic day. And it's not just interesting, it's unusual. It is Friday, as I said. However, markets are not trading. I do believe they open on Monday, but they're not trading today. We have CPI numbers coming in. We have Bitcoin options, expirations. We have, what else do we have? We have like tons of things that are all kind of just, they're all like not by themselves huge, but then combined, it just makes for an interesting mix. I have a little list here. Wait, what did I write? I'm on the spot now. Let's see. Yeah, so PCE came in hot, a little bit hotter than expected. And so here's basically what's going on. Chair Powell will speak, and will he really talk about interest rates today? Yeah, you never know. They never really say anything. But what we can infer from this data is that inflation has not cooled really to levels that people might be hoping for. The Fed is addressing their dual mandate and doing everything they can in their power with apparently no data to keep inflation under 2%. So here's kind of where I'm at with this. This does not make it look like a rate cut is going to be likely soon. If we look over to our Fed monitor tool, we have the next FOMC in 4 weeks where we'll get that decision. However, looking at the probability counter over here, we can see that a cut is just not in the cards really at about 9% probability. And if we look at the graph of this, and this graph is going to show us the change in what people have been predicting. And this goes back, I guess, to May last year. People were very confident in early January, upwards of 60-ish% that we would get down to that target. And you can see, without even doing any analysis, you can see this just selling off, trending down, and really reaching about that 0% mark. If we get hot data or anything else that the Fed might not enjoy, we could see this move even lower, maybe down to where we saw it before last FOMC's meeting at like 1%. No interest rate cut or no change is now almost at 100% probability, and that's likely off the back of some of this data coming in. So definitely a spicy setup. Absolutely. Let me see. Oh, also gold hit an all-time high like last night. Another piece of that puzzle. I knew there was more. Gold hitting at an all-time high last time this happened in March. That's this month. Bitcoin followed and moved to a new all-time high as well. So gold definitely making some waves in the market right now, and just another kind of layer to this beefy burrito. And I guess last but not least, Q1 is now done. Q1 is over for traditional markets. And of course, in crypto, we never sleep, so we ain't sleeping. We're still trading. But traditional markets now closed. I wanted to show you a metric we don't talk about too much because I've not really found it to be a great indicator of price, but people are looking for kind of expiration data and things today. I didn't have a ton of time this morning to do homework, but interesting. We have a lot more volume here on Deribit than we usually do. And we can see on March 30th here, hopefully you can see this, max pain price sitting at 71,000. So what this means is at the end of the market day, basically all these bets that were made throughout the last few months get to settle up. The max pain price, people tend to say, oh, that's where spot price is going to go. And they're not wrong, but it just hasn't been a great indicator. Basically is where the most participants that have made bets will lose money, and seeing it sitting here at 71,000 is solid. That's a great sign for today. I'm going to take it. I'm going to kind of interpret this as we're likely to see March move into April around the 70K mark, and that makes me nice and bully. It keeps me nice and bullish. Bitcoin spot net flows. We saw our little outflow last week, and into the 26th, we saw that reverse, and now 3 days of positive net flows again. As long as these are green, I don't see a reason to bet down. The day of 5 days of kind of not huge outflows was not a super bullish sign. Did put some downward pressure on the market, but really, man, Bitcoin does not seem to care. It's getting harder and harder to bring you guys valuable data and valuable kind of like analysis, because Bitcoin is just being a honey badger right now. Like, it does not seem to care about anything other than going up. I don't know. Last but not least, Bitcoin ETF overview. I wanted to touch on this because you guys know this is one of my favorite topics. I love this. Really the biggest thing I wanted to show you and just update on. Grayscale, if you remember. Okay, sure. Grayscale started this year with 620,000 Bitcoin, over 500,000 Bitcoin. Now down to 300. Where did that number go? It is right here. 335,000 for a total sale of almost 300,000 Bitcoin. To put this into perspective, and I think this is the most important part. Let's put it into perspective here. Let's get rid of all of our lines and charts and positions and whatever. Does this chart look like something that has sold 300,000 Bitcoins at about 70,000 a unit? Up at basically at all-time highs, retesting all-time highs with the downward selling pressure of 300,000 Bitcoin. I don't know how else to say it, but that's crazy bullish. That is like maybe the most bullish thing we can look at. And I think everyone should be following the inflows and outflows of these ETFs as we go forward. I think they're going to bring us some light, but remember, they are lagging data. You don't get it at the end of the day. It's not really super tradable, but what it is it's a really good indicator of maybe the short term, or I'll say the short term trend. Say short term, maybe into midterm. All right, we got about 400 viewers. We're warming up. We have our Chirpowish live at the Federal Reserve Bank in just 5 minutes. So what should we do till then? I could pull up some charts for you quick. Might not be a bad idea. What you could do for me is to smash that like button. If you haven't, caress the like button. If you haven't subscribed yet, you should definitely subscribe as well. We broke 100,000 subscribers and we have not lost any momentum. We're shooting through. We're already up another 2,000 from a week ago. It's pretty wild, guys. Doing a great job. Do that for me and I'll do this for you. Join the Discord as well. Discord.gg/TomCrown. Great time. All right, let me jump into some charts in the 5 minutes we have, and I'm going to just basically watch this with you guys. It's Friday. It's Friday. I'll have to bring back F-Boy Friday. Maybe in the summer. Summers are for F-Boys. Not really winter time, lads. All right. Quick kind of overall analysis. This is the total crypto market cap. If you've never seen it, welcome to charts. This is the representation of all of the cryptocurrencies. It is a calculated metric, but all the cryptocurrencies in this space kind of added together to be viewed on one chart as maybe a greater chart, a bigger chart. This might be why some of you who have been in this space for cycles aren't seeing all-time highs in your portfolio. I hope you are. I personally, mine just hit an all-time high versus 21 like last week or the week before. Took a while. But this might be the reason. Bitcoin and others are at all-time highs or beyond them. However, the total crypto market cap is not. So if you're not at all-time highs, like I wasn't when Bitcoin broke, that means you probably have some alts that haven't performed yet. And I feel that. That is just the way it is. But don't worry. This is the ultimate bull run signal, in my opinion. As soon as total breaks, let's just call it 3 trillion flat, it will be undeniable. This will be an undeniable bull run signal. Bitcoin breaking all-time high is incredibly confident, but this is even more confident. Kind of just dicking around up here after putting in serious highs. It looks like the weekly did come back on total. No, it didn't. Man, this chart's old. I have to redo this. Okay, scratch that. Total hit its highest monthly resistance at 2.62 trillion. It has retraced a little bit. I mean, I don't know. The trend is your friend. I wouldn't fight this. I think that total is going to move to a new all-time high in crypto. I would honestly expect this. April, May is a hard bet for something like that, but it would not surprise me. By the end of the year, there's almost zero doubt in my mind. I'm watching total. It has It's been reluctant, but right now, after our little sell-off here, starting to look a lot like the post-ETF sell-off, consolidating under resistance. Yesterday closed bullish engulfed, just like Bitcoin. I think that we may see actually a pretty strong rally over the weekend. Touching on the macros as well, I gotta go fast. Just like Sonic, we only have 2 minutes. Total 3. So as I said, some of those altcoins maybe not performing. Here's your like visual of this. Total 3 is just showing you altcoins essentially. It's total minus Bitcoin and Ethereum. And the total moved right to our little monthly resistance here. For a reminder, this is about the equivalent of a 48,000 Bitcoin. Right about here where total is at 790 billion. This is definitely showing us that some altcoins haven't performed yet, but to me, this looks like a chart that is strong. April could bring some retracement. We did see this on the way up. Let's see, January, the first month of this year, we had a nice little setup. Wouldn't surprise me to see that into April. Again, though, just like total, I don't see how this doesn't hit an all-time high. I don't get it. I don't think that that's going to happen. I'm going to show you gold because gold did not only break its all-time high, which is very exciting, as I don't want to say they're correlated, but Bitcoin and gold have a relationship. They just have like a sticky relationship. Gold not only broke its all-time high, it's still there. Obviously, markets are closed, but gold managed to close. This is the big part. People might be yelling about all-time highs, and you know, I love doing that too. Gold closed the week at all-time high. I do not really remember the last time this happened. If you look back on gold, and we've covered pretty much every one of these all-time highs on this live, because I just like looking at it. You can see a pattern. Every time it's hit an all-time high, it's basically just gotten slapped back down. From September of 2000 all the way to March of 21, like a year, maybe 2 years here, a year. Even in November, late last year, it broke an all-time high just to return. So here's kind of the takeaway for me. Gold, not just at an all-time high, closing at an all-time high, not giving back those gains instantly. This is different behavior from gold than we've seen, and something tells me that this, maybe even Monday, we'll learn something's going on. Maybe Chairman Powell will shed some light on it. Time will tell. All right. I think this thing is like ready. Let me see. It should be. You stand by. Give me a sec. Give me just 1 second. By the way, if your stream is very thin, right? It's very thin and you're confused, that means you're on the mobile stream. That's okay. You can join us over on the main stream. Just go to the channel page and navigate over here. But hey, if you like the mobile stream, stay over there. Give me 1 sec. I gotta fire this stuff up. Okay, it's not muted. There it is. Stream starting soon. Just like Chairman Powell, man. Always fashionably late. Fashionably late. All right, that should be good to go. Looks like I have just enough time. Just enough time to cover the one thing you guys know I'm looking at right now, and that'd be Litecoin, baby. My baby Litecoin. Whew. Not out of the woods yet, bros, but we're starting to see some of that sweet sunlight. Oh, someone's talking because there we go.
No, not the pin.
Litecoin breaking monthly highs.
Told me to lock my computer.
What is this?
Says I require a pin.
Yeah, nobody cares. Okay, we'll figure that out. What's up, Relax Music? TJA, I see you, bro. Appreciate you. Keep subscribing. Be like Relax Music. Litecoin, my baby, did break March highs while this lady tries to figure out the password for the laptop. It did trade to about 107 earlier, just before the stream, and this is looking very good. It's looking very good. I'm looking for a $120 target on Litecoin. Using our fib tool gives us a number right about up there. This is a very historical level for Litecoin. Okay, it looks like maybe they found the password. I thought maybe this person wasn't involved. Let's see.
We use our front doors. Now, the Macroeconomics and Monetary Policy Conference is one of the bank's longest standing research events.
Let's jump into it.
The conference began in 1976 as an episodic, topic-driven conference where we would focus on things that would allow researchers and policymakers to really talk to each other on foundational topics that were key to macroeconomics and monetary policy, as the title would suggest. But since that time, it's become an annual event, and it's helped us navigate through 6 recessions, high and low inflation, 9/11, a financial crisis, slow growth, and most recently, a pandemic. Now, I attribute its durability to a very simple fact. Research makes policy better, and policy challenges spur better and more relevant research.
Let's put a pause on her. I'm not so into hearing about San Francisco banks. I don't know, whatever little speech they wrote about themselves. If you guys really want to listen to it, let me know, but I kind of doubt you do. Kind of doubt it. To my knowledge, he should be on in just a few minutes. This is kind of par for the course. We see this every time. There's always someone else talking we don't care about. Let's get our little charts up here.
And Federal Reserve communications and policy implementation.
We got the S&P, Bitcoin S&P, and the dollar. Dollar, actually, this is worthy of going over too. Interesting that gold is moving and at all-time highs. The dollar also showing strength here. We were looking for a bounce on the dollar on our main TA here. However, I did not expect it to really or meaningfully break past 103.7. The dollar kind of throwing a wrench at what I was looking for, even worthy actually of pulling that up. There we go.
Now, as you can imagine,
the dollar did close strong in March. Very strong. Nice. Nice strong hammer candle there on the March. I was not hoping for that. No higher high, which is all right. Man, that's strength, dude. Bullish engulf coming right up. Can't see the dollar moving to 104.12 probably early in April, but finding support there, and you're really looking to retest your highs of last year. That's very unexpected for me. 106.6. Let's see. We can look at a lot of charts actually on the quarter right now. Failed the bullish engulf quarter. That's an interesting thing. On the month, that looked very strong. And then you go to a longer time frame, and it's like, maybe not. They're not. You had bearish engulfing quarter. Bulls came in. They were impressive, but they weren't able to make that ground back up. And for me, that's a sign of a higher time frame weakness. That would be more in line with what we're talking about with gold and other things. But at the moment, it seems like everything is up. Maybe it's a reverse 2020.
He returned to public service in 2012.
Everything went down. Okay, these aren't even going to be trading. We don't even have to have them up. So it's so ridiculous to me that markets just close. It's like, now you're done. You don't get the trade. You don't get the trade. We'll let you know. We'll let you know how much control is there over those markets, man. They just shut it down on a Friday. Shut it down if it goes up too much. Shut it down if it goes down too much. Shut it down. I don't know if they just feel like it. Just kind of like thought it was the cool thing to do. Man, opt out of that system. Get out of that system. All right. Well, it seems like we have some time because Chairman Powell is hiding probably behind those curtains somewhere. Probably looking for the data. Probably talking to Gina. So in the meantime, let's kill some time. Let's see who's here. What's up, Rash Valdo 10? Thank you for subscribing, my friend. Good to see you. Chairman Powell. That's right. Nomadic life. Chairman Powell. Are you ready? What's up, Juanito? There you are, man. I saw you in Randy's stream. What's up, bro? What's up, Polar Bear Man? RRPONTSYD, showing bad for crypto. What is that acronym, my friend? I'd never seen that. What's up, Brian? What's up, Vivi Pooski? It's Friday, boys. It's Friday. What are we doing this weekend? What are we doing this weekend? What's up, Sophisticated Dirtbag Fly Fishing? What's up, Kai? Senor Scoopes. What do I think about Bitcoin Cash? Bitcoin Cash is doing good. I said, I think last week I was looking for 750 on BCH. Took a little bit longer than I expected, but it finally broke out. Kind of, little accumulation at that $500 mark before breaking through March's high, just like Litecoin. Although BCH obviously has put on more ground. I'm looking for this like 750 mark in between our 1618 and our 2 measured move up here. This is a great profit-taking target, but, big but, giggity. Look at this weekly. That's gorgeous.
To keep working until the job is
750 might be too conservative.
a person
Might be
who
too
wants to
conservative.
share, Jay, you have a racial-
Bitcoin Cash's structure,
curious, never
the fall from May of 21, is just very different,
rarely seen together.
in my opinion,
That is to be
from a lot of other charts. And so I'm not as confident in predicting kind of like a retest of all-time high or not. You have these like Twin Peak-ish kind of thing going on before you fall. You broke it. You backtested as resistance. You fell. You had lots of inefficiency. You filled it. You filled that inefficiency back in. You popped. And so really a lot can happen here in this like 750 mark. What I can say is getting above these highs from October, November of 21, then the all-time high / monthly high is like right back on the table. And that sits all the way up at 1430. Definitely in the realm of possibility. $1,000 is always a beautiful target on anything. Nice psychological value. But this chart's just a little bit different than most of the things. A lot of crypto will follow kind of similar patterns or at least similar structures, and this is just a little bit more foreign. I don't know. What do you guys think? What do you guys think? I mean, I guess I used to hate Bitcoin Cash, but those days are long behind me. There's no point of hating it. And in reality, it does fit the things I like about crypto. Proof of work, decentralized origins, fair. I was just salty from the block wars. At this point, I don't care. There's so many other things. It was like a warm-up for Bitcoin. Probably had to happen. I think this monthly, man. Let's do moon math. BCH moon math. Wait, is that Chairman Powell? How would a $10,000 BCH sound to you? It is possible. Break the all-time high. Ooh, there he is. I'm going to shut up now. Chairman Powell is live. Everybody shut up. Everybody smash the like, subscribes. Let's go.
That's right. Keeps his footing.
Turn it up.
Good morning. And good morning, Chair Powell.
Chairman Powell.
Thank you for taking the time. We have, give or take, 45 minutes.
This audio is terrible.
So I'm going to jump right in with the data of the morning. PCE came out this morning.
That guy's got the data.
2.8% at the core. Here's my question. You saw it yesterday. What was your first thought?
My first thought was that the report that came out this morning is pretty much in line with our expectations. So core PCE, as you mentioned, is at 2.8% on a 12-month basis. Headline is at 2.5%. That's what we were expecting, and it's good to see something coming in line with expectations.
So as you and your colleagues at Fed and at the regional banks have been saying, we want more data, more good data. Is this that? Is this in that bucket?
Is this that data?
Well, let's take a step back. Over the course of the second half of last year, we got what I would definitely consider good data over the course of 7 months. And then in January of this year, we got a very high reading, much higher reading on inflation.
Yeah, very high.
And so February is lower, but it's not as low as most of the good readings we got in the second half of last year. But it's definitely more along the lines of what we want to see. What we've said is that we don't see it as likely to be appropriate that we would begin to reduce interest rates until the committee, the Federal Open Market Committee, is confident that inflation is moving down to 2% on a sustained basis. And what do we need to get that confidence? It's just more good inflation readings, like the ones we were getting last year.
With all possible respect, you all of you, have been saying the same thing for now 6 months, right? You want more good data. What do you suppose it does to the listening public and to the professionals who are listening to this when you keep saying the same thing?
This guy's a Chad, dude. Holy shit. Who is this guy?
You know, we're steady. Our hand is a steady hand in this. We've been saying all through last year and this year that we're making progress. We've noted that progress. We haven't overreacted to it. We didn't overreact to the good data we had in the second half of last year. You heard us saying that this is good, but we need to see more. And you won't hear us overreacting to these 2 months that are higher. The reason that's important is that the decision to begin to reduce rates is a very, very important one because the risks are two-sided. If we reduce rates too soon, there's a chance that inflation would pop back and we'd have to come back in and that would be very disruptive. That would not be a good thing for the economy. There's also a risk that we would wait too long, and we would in that case, it could be unnecessary, unneeded damage to the economy and perhaps the labor market.
Why would it be terrible if you reduce interest rates by 25 basis points, quarter percentage point, and then the data changes and you have to change your mind? Why is that terrible?
Dude, this guy's
It wouldn't
going for
need to
the
be terrible.
throat.
And you're right. We always have to be humble that we actually the outlook is always much more uncertain than most people think, including us. The economy can and often has recently performed in unexpected ways. So we're ready for that, and if that's what happens, that's what we'll do. But it's important to get this right. The other thing, though, is with the economy, growth is strong right now. The labor market is strong right now, and inflation has been coming down. We can and we will be careful about this decision because we can be.
Say more about because you can be. You got nothing but time, basically?
Dude,
Is that what?
who is
No,
this
the
guy?
economy is strong. We see very strong growth. We had growth for last year over 3%. Many forecasters see growth coming down to around 2% this year. That's about roughly what the first quarter looks like. That means that we don't need to be in a hurry to cut. It means we can wait and become more confident that, in fact, inflation is coming down to 2% on a sustainable basis.
So this is kind of a subjective question, but then why then do you think people are screaming, not for your heads, but close, but for you to cut interest rates so much?
Well, I mean, I would say we've divided our critics into sort of equal-sized piles at this point. There's plenty of people who think that that we shouldn't be cutting now. But the point is this: we haven't reduced interest rates. What we've said is we want to be more confident before we take that step. And I actually think monetary policy is well placed to react to a range of different paths for the data. And that's really what you want. You want to be in a position where you can react not just to the base case, but if you get a case where inflation progress slows or where the economy weakens, you're also in a position to react to that, and we are.
When you sit around the table at the Fed or on your Zooms or however you're doing it now, do you have conversations about how your desire to be more confident is received by, yes, the markets and analysts, fine, but everybody else?
So I'd say, the answer is yes, of course, but the main focus is on getting it right. Getting it right is the most important thing by orders of magnitude. If you get it right, then everything else falls into place. So, I mean, you're talking about market reaction and things like that. We look at that, of course, but ultimately, monetary policy works with a lag, and you want to make the right decisions, and you want the committee to be in a place so that if things work out differently than the base case, you're not out of position. And as I said, I think we're in position now where we can handle whatever case comes.
Can we talk briefly about that first cut, which you mentioned, right? That's going to be significant. It came up at your last press conference after the meeting. How important is unanimity to you on that?
Unanimity as such. So I don't know any Fed chairs who were hoping for dissents.
Sure.
It's not something you want. But at the same time, the way I think about it is this: you talk to people. I talk to all the people on the committee before each meeting, in depth, and you listen to people. You hear them. You try to get in their thinking and understand it, and you try to incorporate that to the maximum extent you can in the decision and the way we talk about it. And if you do that, people generally feel consulted. They feel that their views are being considered and reflected, and they may choose to dissent. That happens all the time. It's not a problem when people dissent. It happens, and life goes on.
Do you literally go knock on their doors or call them on the phone? Like you call Mary or whoever?
Yes, I have. Well, I have scheduled calls with every voter and non-voter on the FOMC before every meeting, and not infrequently I'll have another round of calls before that, and not infrequently I will have just calls. I just talk to various people on the committee during that 6 or 7 week intermeeting period. Yeah.
This is the
Let's talk about
best
Fed as
Chairman
an
Powell
institution
speech
then
ever.
For a second, since we're talking about the people and
It really is.
how it all happens. It is, some may argue, one of the significant economic institutions in this government that actually works, right? Congress is a whole different deal. The president's concentrating on his reelection campaign. The Fed as an institution works, and you said to Scott Pelley, I think, on 60 Minutes, integrity is all we have. How mindful are you of the Fed's credibility at a time which is precarious for you?
So the Fed to me, is a very important American institution that serves all Americans on a non-political basis. And what people can expect from us is that we will do our work with painstaking care. We'll understand the theory, we'll understand the data, we'll think about the outlook, and we'll make our decisions based on that and on nothing else. We will not be making decisions particularly about political calendars or anything like that. We don't always get it right.
What's up, TP
No one
Games?
does, but that's what we'll do. So integrity is is everything for ultimately in life. Integrity is everything, but for us, integrity is everything because even when we don't get it exactly right, people have to believe, and it's true that we're doing the absolute best we can in a very transparent way, based on the data, based on our understanding of the economy and the outlook for the economy. It's tremendously important that people understand that about the Fed and that we're working to serve all Americans, not any particular set of Americans or political parties or leaders.
You've talked previously about humility. You've said the word humble already this morning once. I was talking to Neil Kashkari at the Minneapolis Fed the other day, and he said, this economy is really tough to diagnose, so it's hard for us to know what's going on. Talk to me about humility in the face of, and we were talking about this backstage, about an economy that is still really, really hard to figure out what's going on.
So economic forecasters are a humble lot, generally, with much to be humble about.
That's funny. That's not my experience with economic forecasting.
Who is this guy?
So, the pandemic era has, of course, been full of surprises. If you go back to the beginning, I think almost all of mainstream macro analysts thought that this was different, and that because of the obvious supply side problems, the collapse of supply chains and things like that, there was a group who didn't diagnose it that way. But if that's the case, then we thought that our very dynamic economy would recover pretty quickly, that people would go back to work, kids would go back to school, and the economy would be fine, and there wouldn't be much of a need for us to intervene, except sort of during that early period to get the economy, keep it from collapsing during the actual intense phase of acute phase of the pandemic. So that didn't happen. Inflation came up, stayed up, and it took a long time to heal. And then it didn't really heal. The supply side didn't really heal in 2022, and we were thinking, well, maybe it's not going to heal. And then it did. And the labor force participation, workers came back into the labor force in 2023, and also the supply chains healed in 2023. So right about the time we were thinking maybe this isn't going to happen, it really happened a lot in 2023, which is part of the story of why the economy did so well last year was supply side healing. So now we have, it's been surprising over and over again. So I think we have to be unusually humble about our ability to foresee the future and be ready for different plausible outcomes.
I've told you this story, I think, the last time you and I spoke, about a conversation I had with then civilian Yellen. It was between her time as chair and Treasury Secretary, and I asked her why the Fed hadn't been able to get inflation up to where she wanted it to be, where the committee wanted it to be. And she literally looked at me and went, I don't know. I guess my question is would it be a bad thing for you to say, we don't know, we're doing the best we can?
So we say that all the time in one way or another. I'll give you an example. We have, as I mentioned, high inflation in January, somewhat less high inflation in February, and we've been saying that we expect inflation to move down to 2%, but on a path that is sometimes bumpy. So the question then is, are those just bumps, or are they something more than bumps? Is progress on inflation going to slow for more than 2 months? And that's a question, and honestly, we're just going to have to let the data tell us that. There isn't anybody who knows. And so our position is, we don't know. We'll tell you what we will do if inflation does come down. And that's sort of the base case. That is what we expect. We expect inflation to come down on a sometimes bumpy path to 2%. But if that doesn't happen, then obviously our rate policy will be different. And for example, we can hold rates where they are for longer. And that's what we would do, of course, if inflation does.
That's what they're going to do.
Come down if we don't see the progress we're looking at. So we kind of say that all the time.
consensus now is rates are going to be higher for longer. They may or may not come down this year, depending on what the data says. Do you think this economy is ready for a 4.5-ish% inflationary sort of economy, right? Not inflation of 4%, but your rates at 4.6, which is where your projections have them.
So this is one of the things, we've had our policy rate at 5.3%, which is the highest rate in more than 2 decades for some time. And all through the course of 2023, we saw very strong growth.
Yep.
So it's, and that's partly because this has happened in a context of supply side healing, which makes its own growth, when potential output goes up. So we don't really know where rates are going to go back to when this whole thing is over. For many years, if you go back to before the global financial crisis, it wasn't unusual to see the longer term rates in the 4s. And so are we going to go back to, whereas in the sort of time between the global financial crisis and the pandemic, rates went lower and lower and lower, and it wasn't unusual to see in other countries long-term rates below zero even. In Europe. They never went that low in the United States, but they went very low. So are they going to go back up to those higher levels of the pre-global financial crisis? We really don't know. So we think that the factors that led rates to really came down over a 40-year period, mostly related to big, slow-moving things like demographics, aging population, which saves more, and productivity, low productivity, and things like that. Those things don't jump around. They're sort of slow-moving objects. But the truth is we don't know. My own expectation is I don't think rates will go back down to the very, very low levels they were at before the pandemic. But where they will turn out to settle out, it's hard to say. This economy doesn't feel like it's suffering from the current level of rates, although if you look at things like inflation-sensitive spending, then those parts of the economy are really feeling the high rates.
Not to pick at a scab, but what I hear you saying is, while inflation may or may not have been transitory, rates are not actually going to be transitory. They're going to be higher for a while, and people just need to get used to that.
That might be the case. I don't know. I don't think rates will go back to the very historically low levels that they were at before the pandemic hit. I do think rates will come down are likely to be lower than they are, at least short-term rates are lower than they were right now. But I mean, we're going to let the data, we're going to have to let the data tell us the answer
The what?
to that.
I want to go to the labor market for a minute. Something you said at your last press conference sort of caught a lot of people's ears, and that was when you said, we are very attentive to both sides of the mandate, which is to say full employment and stable prices. And people picked up on that because you had been very keyed in on the price stability aspect. And I guess I wonder now why you're becoming more aware, or publicly saying you are more aware, of unemployment.
I'll tell you why. So if we have two mandates, as you know, maximum employment and price stability. And when one of those mandates is far from its goal, and the other one isn't, you focus on the one that's far from its goal. And that's actually in our document that codifies the way our framework. So that was the case from the late 2021 until inflation started coming down. And so we focused very hard on inflation, and you heard us talking about inflation. But headline inflation just a year ago was I guess 5.2% on a 12-month basis. Now it's 2.5%. And core, I think, has come down from 4.8 to 2.8. So you've seen really significant progress. Just as a natural thing then, the work's not done. Our goal is 2%. But as that happens, the risks to the two goals come into better balance. They're coming into better balance. And that means we are a dual mandate bank under law. That means that we now that thing we were doing, we were just thinking about inflation, that's no longer appropriate. So we're thinking about both. We're thinking about the risks to both now, and we should be. That's our job under the law. And so, we're very committed to getting inflation down to 2%. Having it down to 2% is critical if we're going to have the kind of long expansions that really benefit all Americans in the workplace. At the same time, if we were to see unexpected weakness in the labor market, then that's something that we would be looking at carefully and could draw a response as well.
A policy response, clearly.
Yes.
Yeah. What's the
Get
monster
him.
under your bed? What keeps you up at night? Other than inflation, you don't get to say inflation.
This guy.
No, you can't do that.
Who is this guy? Who is he,
No,
Chad?
I would say this. We're at a place where the economy is strong, without question. The labor market's in a good place. We've got, unemployment under 4% for more than 2 years now, for the longest time in 50 years, and we've had progress on inflation. So we want to use our tools in a way that keeps, the strength in the economy and in the labor market, but allows for further progress in inflation. That's our focus. And we clearly have a chance at that outcome, and we're all very, very focused on doing everything we can to deliver that outcome. It would be a great outcome for the American people, and it would be testimony to how unusual the circumstances are.
Soft landing, transitory, words that I imagine you don't let be said in your presence very much. Here's another one that hasn't been said at a press conference that you've had since December: recession. Do you think a recession's off the table?
So there's always an sort of unconditional probability of a recession in the next year. And so the real question is, if you look through history, it's not possible to rule a recession out for a long period of time. So
Granted, but you know what I meant, right?
the real question is the possibility of a recession elevated at the current time? And I would say no. I don't
Agree.
see forecasters disagreeing with that.
Agree.
Growth is strong, as I mentioned. The economy's in a good place, and there's no reason to think the economy is in a recession or is at the edge of one. But humility.
Understood. Last time you were on the Hill, somebody asked you whether you were going to come out and declare victory. You were going to say, yeah, we did it, we're done. And you said, absolutely not, that's not what we do. Will you not, at some point, though, when you get inflation to 2%, say, inflation's at 2%, we've done our job, things are stable, and life is good?
I don't want to speculate about that. We'll jinx it, guy. So I'm such a superstitious
Respect.
person. But
Respect.
oh, look, we'll always tell you what we're seeing in the economy, and if we get to that place, that'd be a great outcome for the public. That's the main thing.
We talked very briefly backstage about after the Fed, what you're going to do, because you have 2 years left, give or take. As we sit here in the Yellen Conference Center at the San Francisco Fed, where do you think the Powell Conference Center is going to be? And what do you think your legacy is going to be?
This guy's a Chad.
First line of your New York Times obit.
I'll tell you the thing that I care about the most, and that is the Federal Reserve as an institution, as I mentioned, is an incredibly important American institution, especially right now, because we are that place. We aspire to be that place that transcends politics, divisive politics. And I think, in a way, we are helping hold this thing together by doing what we do the way we do it. And I feel accountable and responsible for the institution and delivering it to the next generation of leaders and people in a way that it can still serve the American public the way the Fed does.
So I wasn't actually going to go to politics this morning because you have a well-practiced answer to that question, but I feel like I kind of have to now that you brought it up twice. It is possible that the Fed is likely even that the Fed is going to become more politicized this year. And the first time you and I spoke in 2018, you were in the crosshairs of the president and the administration, and I asked you about it, and you said, you know what? Control the controllable. Can't do anything about it. So the question is not what are you going to do about the politics of it. The question is, what is your fear for the economy if the Fed becomes politicized?
It just wouldn't. We wouldn't be the Fed. But the good news is we are the Fed.
Well, no. That's not answering the question.
No, a central bank that is excessively responsive to. You have to look at other countries, basically, and what you see is there's no credibility. Credibility on inflation and on sticking to your knitting is everything. Because if people believe that you will accomplish your goals, and that you won't deviate from them for reasons like that, then it'll be easier to do so. Markets will react appropriately, and in people's thinking, inflation should be around 2%, and if they think that way, then it probably will be around 2%. So if you look at I think of more emerging countries where they have weaker independence or a lack of independence, it's just it's hard to have price stability or maximum employment. So that's what would happen if that were to happen. But I'll insist upon saying that's not the world we live in.
Fair enough. One more question along those lines, and then I'll leave it be. You don't comment on fiscal policy. This is not a question about fiscal policy. It's a question about what the Fed will do if our current fiscal path, which many have called unsustainable, including Chair Yellen when she was chair and
Sure, Yellen.
in the interregnum. What do you do if our fiscal path continues? What does the Fed have to think about?
We're always going to do what we need to do with our policy tools to achieve the goals Congress has assigned to us. And that means maximum employment and price stability. So we're not going to be thinking, gee, we shouldn't raise rates for fiscal reasons. We're never doing that. We're always going to use our tools, and we're always going to assume that the fiscal authorities can run their side of it and can get it under control. And I think it's what I said and what Ben Bernanke said and what Janet said, and I'm sure Alan Greenspan said before him, is we're not on a sustainable fiscal path. That's an uncontroversial statement. And the sooner we get on that path, the better, back on that path.
A word here about the balance sheet. You said you're going to slow the runoff and sort of keep an eye on things and how they go. Does it suggest a worry about the economy that you're going to slow the runoff of the balance sheet?
Not at all. So we published the thing about the balance sheet is we want to be highly transparent and predictable. It's not the main story about monetary policy. The main story is interest rates. What happens is when we get into a very difficult situation like the pandemic or the global financial crisis, we buy treasuries to lower interest rates and to support the economy. And then we're left with a bigger balance sheet, and we start to then, when the time is right, let it run off and shrink back to where it needs to be. So that's what we're doing. And what we said was, at a certain point, we would slow the pace. And the reason is, it's moving down quickly. We've decreased the size of the securities portfolio by $1.5 trillion over the course of the last year and a half, not even year and a half. And so we've said that we would slow the pace, and what we're trying to do there is try to actually get further without being disruptive. The last tightening cycle for the balance sheet ended when we suddenly found ourselves that we'd gone too far. And it was very disruptive to markets, and we had to buy treasuries to create more reserves in the economy. So this time we tried to learn from our first experience with shrinking the balance sheet, and this time we said we would slow at a certain point. But we're going to get to the same point or even lower than we would have, and it's not at all in any way related to a concern about the economy. It's our plan.
On that word transparency, which you've mentioned a couple of times, and on your policy and your predecessor's policy and those of the committee and the Board of Governors of transparency and giving forward guidance and letting everybody know what you're thinking and what your plan is. Why?
So the old school was tell them nothing, be mysterious about it. And then a bunch of scholars 40 years ago, people like Alan Blinder and others, thought about it and said, if the public understood your reaction function, the way you would react to different kinds of data, then that'll make your job easier, because markets they'll go, oh, I see, the data came in, let's say that some data comes in hot. The Fed will do X, so we'll react that way. So in effect, the markets and the public will understand what you're doing is a good thing, and that was very novel. So the path went from tell them nothing. The Fed didn't even announce what it did at an FOMC meeting until 1994. The first post-meeting statement saying, hey, we raised rates or we didn't, was 1994. So from there, you have a straight line, really, of increasing transparency to the point where you are now, where you see a lot of transparency. Some people say it's too much, but that's the idea. And I think you've gotten to a place where we try to be so clear in what we're doing that the public will understand what we're doing and why, and that actually helps our policy be more effective.
Humor me. What happens if well, everybody's anticipating a cut in June, but what happens if you guys out of nowhere came out and at 11 o'clock Pacific time, I know it's different for all of you in different time zones, the statement came out and said, we cut 25 basis points today without having given anybody a heads up. What do you think happens?
Nothing good. I mean, I think we would.
Seriously?
Well, what would
Everybody
happen?
goes, yay, rate cut.
No. But we would, look,
Who is
we
this
are
guy?
careful, thoughtful. We're steady
Yay,
hand.
rate cut.
If we did things like that, it would be very much not the way we do business.
No, it wouldn't, but play it out for me. What do you suppose happens? Seriously, humor me.
I think if we did something like that, markets would say, we thought we understood the Fed. We've spent years. Someone would go on TV and said, I've spent 30 years watching the Fed, and I don't understand this at all. Why'd they do it? In other words, doing an off-cycle rate cut, like at a time like that, it's just something that would never happen. I mean, if there were a reason. So we when the pandemic hit,
Those we all know.
we did two off-cycle meetings in one cycle, and then
I
we
don't
canceled
agree.
the actual meeting. So just
And look what happened then.
well, that was
We had a pandemic.
That was
Sorry,
what
just-
needed to happen.
It's Chair Powell's
That was what
fault.
needed to happen.
It's Chair Powell's fault.
Do you worry that the Fed gets covered too much, especially now when we're all trying to parse your every word? Gets covered too much like a horse race, kind of. There's a little bit of
That's
who's in
us.
front? Polls say
That's
this.
us.
What are they going to do?
Yeah, I do worry about that. I think that the things that really matter for our economy over the long term are not the Fed's interest rate decisions, which really have no impact over the things that matter on the
Say
long
that again. Seriously, say it for the cameras.
No, okay. The things that matter for the United States economy over the medium and longer term are not the decisions the Fed makes. The Fed tries to guide the economy to maximum employment and price stability through a business cycle and can react. We do critical things during crises. We're very, very important in crises. But things that add to the productive capacity of the United States, things that give people more skills so they can contribute more to the economy, things that increase productivity so that an hour's work is worth more output. That's the evolution of technology. It's also the skills that people have. Those things, investing in those things, that's what drives the longer run growth and the longer run economic well-being of our citizens, not the things that the Fed does. What we do is very important in maintaining stability and smoothing out the business cycle and also crisis response, but we don't work on those really far more important longer run issues.
Apologies to those of you on the live stream and who are going to hear this later on the radio. Is Professor
okay, bro.
Swanson in the room? Sir, I'm sorry, I'm going to steal your thunder. There's a panel coming up this afternoon, sir, at 1:25.
What
The
a
title of
dick.
which is "Speeches by the Fed Chair Are More Important Than FOMC Announcements: An Improved High-Frequency Measure of U.S. Monetary Policy Shocks" by Professor Swanson at the University of California, Irvine, and some others.
Just ruin that guy's whole
Agree or
day.
disagree?
Just ruin that guy's whole day. He's probably spent a month preparing. Wreck.
No, I look forward to. I saw that on the agenda. I look forward to. I'm not going to come in here and embarrass you by being here, but I will. I will read the paper.
But to that general point, do you get too much press?
It's not for me to say, but I do think
It is for you to say.
I
It's
think
literally for you to
I think
say.
I absolutely think there's too much focus. If you think about the things that are really important in the economy, things like trade and what we should be doing, some of the things that we're doing that the administration has done, they're far more important over the medium and longer term than monetary policy is. Although it's important that there be a Fed that has a good framework of monetary policy that's well understood. Very important that we do our job, but don't get me wrong, it is important, but absolutely the other things are more important over a long period of time for the people we all serve.
Around the last time you and I spoke in 2022, I also talked to Chair Bernanke about his book, and I asked him whether you two ever talk on the phone, and he said, yeah, he calls me every now and then, mostly he imagines as a courtesy to him, and I said, well, Jay Powell's a good guy, he probably just calls you. And he said, when Jay was new to the Fed, he used to come down to my office on a Saturday morning with another governor or two, and we would just talk about monetary policy as he was trying to learn. And I guess my question is, do people come to you now?
Oh, well, they don't necessarily. I don't go to the office on Saturday anymore, but Ben used to go. Ben was in the office on Saturday, and when I was a new governor, so was I. So, and I took the advantage of the fact that he was there in his office and we could chat. It's a much more relaxed way. I talk to people I work at home now on the weekends, and I talk to all kinds of people all weekend long. Yeah.
Who do you go to, though, for counsel?
Well, I talk to my colleagues on the FOMC. I talk to senior staff. I talk to the formers. I talk to both, Janet is now Treasury Secretary, so that's a different thing. But I check in with Ben. I check in with other former Fed people. I can't, you can't get the group of people that you can really talk to is pretty small, but I do take advantage of that. Why wouldn't I?
Back to Kashkari for a minute and the interview I did with him. Well, explain that.
What?
A little chuckle.
You said back to Kashkari.
Well, Neil's an interesting guy. One of the things we were talking about was consensus. I mentioned that before. Do you worry about groupthink around the table? Talk to me about the strength of the conversations, I guess. That's the question.
So this
The
is
robustness of the debate.
This is a virtue of our federated system. So we have 12 reserve banks. Each reserve bank has its own economic staff, and they have traditions. Some, that they follow or don't follow. But in any case, you sort of have a guaranteed institutional diversity of perspectives. Institutionally guaranteed diversity of perspectives. People come in and they're going to have different views, and I think that's absolutely critical. And I do think the fact that we were able to get a unanimous decision on something doesn't mean there weren't different views. Also, remember, before the vote, there's a lot of discussion that goes on to try to arrive at a plan that people can get behind. So it's not, that also tends to minimize.
Sorry, let me just pick up on that. Is it baked before you guys get in the room on the
it's-
Tuesdays and Wednesdays?
It's not fully baked, but yes, you do a lot to. Of course, my part of my job
guy's
is
baked.
to know what people think and to come to the committee with something that has really broad support, and that's part of the thing that I do. But we do have different perspectives, and that's really healthy. I was an investor for quite a while, and when everyone agrees that something is a great investment, you got to really worry. You want somebody who's really smart to explain why it's not, so that you can go through the process of hearing the case against. And I think it's really helpful to hear different views, so that you can sort of test your own perspective. If everybody agrees that it can be kind of flabby. It hasn't really been tested.
Flabby.
Mary Daly in the introduction was talking about your special talent, that you're a listener, you're a consensus builder. What is your special talent? Why do you think you have this job?
Why do I have this job?
Because I'm sure Powell,
Don't ask me,
bitch.
It's not, when I got to the Fed in 2012, of course, I had no idea what was to come. I will say what I try to do on listening is I think if you do listen to people and they understand that you're hearing them and not just kind of explaining things to them, and they get that and they feel listened to and heard from. For most people, most of the time, that's going to be enough for them to go along, even if they don't like a decision. It builds relationships. So I spent a great deal of time with our oversight committees and beyond that on Capitol Hill, and more so than my predecessors. And I think they see the Fed as, I want them to see the Fed as what it is, which is this non-political agency that doesn't run talking points at them and isn't political and is just doing our work and staying out of the political issues. And I'm in their offices listening to what they say, and I think they really appreciate that.
Yeah, but do you think it's working?
What?
Your effort to get them not to see you as a political agency and just doing the best by the American people.
Much better than you would think. I mean, I think there's a certain amount of low noise on that subject, but if you talk to people privately, I think the Fed has an independent Fed has very broad support in both parties on both sides of the hill.
I'll appreciate you're going to want to be discreet on this question, but what's running through your head when you're at the green table in front of a Senate or a House committee?
I'm trying
Like
to
your internal
listen
monologue.
hard to find to get the question, and sometimes the questions are more like speeches, or they're not really questions, or they're not quite the right question, and so I try to find the good question and give the good answer to that question. Also, respect. We in our system of government, they are our oversight, and our democratic legitimacy runs right through transparency and right through their their actions of holding us accountable and being explaining to them what we're doing and why. So we answer any and all questions that they may have, and that's so.
No, he doesn't.
I work hard to get ready for those with a lot of help from people, and we take them very seriously.
Banking regulation. New regulations are in the works. Banks are not happy about it from, excuse me, from Wall Street down to community bankers that I talk to. What's your confidence level about, first of all, about the banking system right now, and then about the need for more regulation? Can you fix what you think is wrong?
Sure. So I would say the banking system is in a good place now. A little over a year ago, we had a period of stress. I think things have settled down significantly. I think banks are lending. I think we focused a lot of attention during that period and since on banks that had things like CRE, commercial real estate losses, or perhaps funding structures that needed to be supported more. And we've worked with a ton of banks to address those issues. And I think the banking system is definitely in a good place. I think the commercial real estate problem will be with us for some years, but it is just a question that some banks, and it's mostly small banks, it's definitely not the very large banks, have concentrations of commercial real estate, and it looks like they will be realizing losses over time. And we're working with them to make sure they have enough capital, that they do understand the losses, and so that they can work through this. And so that's what we're doing. And again, that process will play out, and I think that'll be okay.
I talk to a community banker every now and then up in Seattle, and she basically, I think I don't want to put words in her mouth, but I will. I don't think she would characterize it as working with. I think she would characterize it as the Fed's telling us what to do. And I guess I wonder what your response is to that.
Well, supervisors, we have a job, which is to make sure that banks understand and can manage their risks. And, it can be either of those things. It can sometimes, certainly supervisors have to at some point say, you got to do this. And that's one of the lessons of the Silicon Valley Bank situation was a need to be forceful when it's appropriate.
Sorry, let me dig in on that just a little bit. Forceful is one thing. Well, let me phrase it a different way. Do you need to convince the banks that you're working with them, or can you just say, you got to do it, sorry?
So I think I've never worked as a bank supervisor. So, but what I believe is this: bank supervision can tend to be pretty process oriented, and there's a playbook, there's a checklist, and that's a good thing because you want the banks. It wants to be transparent so that they know what's expected, so they can do what's expected. But it can also be slow when it needs to be fast. And so the art of it, and there's definitely an element of art in this thing. And some people are just very, very good at it, and others less so. But you can see the art of it, though, is for them banks to understand. Generally, banks, banking is different from many other industries. It is a heavily regulated and supervised industry, and they, particularly the larger institutions, they have ongoing daily interactions with their regulators and supervisors. What's important is that the banks are well capitalized, that they understand their risks and they can manage them, that they have adequate liquidity, that they have good resolution plans. And our job is to make sure that that's the case. The more the banks take that on themselves and do a great job at it without us pushing them, the less we need to push.
The international situation. The United States is doing better than every developed economy, I believe, in the world by a good measure. What do you make of that, and how does it affect your decision making?
So I do, do a fair amount of my job is going to these international meetings, either in Basel or whoever's running the G7 or the G20 in a given year, and that is what people are talking about is the sort of exceptionalism right now of the U.S. economy, how strong the U.S. economy is. And there's no question that we are performing very well. I think part of it just is, productivity is a key thing. The Europeans are very focused right now on not just their short-term low productivity, but what can they do to have greater productivity growth over time. This is a big focus for the European economic officials at the highest level. Mario Draghi is doing a report on it. And the finance ministers that I talk to from the big countries, this is their focus. And so it's tremendously important. And so people are thinking about what can we do. Some of the things they're looking at doing sound like the United States, like having a flexible labor market and having a very active financial sector that can fund early stage or small companies well. So it's very important. And so yeah, the U.S. is doing the performance of the U.S. economy in the last year or so has been quite strong.
Does that affect how you do your job?
Yes, it does.
Discuss.
Well,
Discuss.
Seriously?
Apparently.
Oh, man.
Discuss.
I know. It goes fast when you're having a good time.
My job
Dude.
is to hit a time post, and I can't even do that.
F
Well,
everybody
I
else
know,
who's
but
supposed to
I'm
talk
your
today.
helper.
Screw everyone else who's supposed to talk today. Let this Chad just sit here with him until they're, I don't know, they have to close the
I'm
building.
on stage, ready to help you.
Sorry,
so,
Mary.
Chair Powell, I'll turn it back to you.
as I mentioned earlier, the fact that the U.S. economy is growing at such a solid pace, the fact that the labor market is, still very, very strong, gives us the chance to just be a little more confident about inflation coming down before we take the important step of cutting rates. And so we're not going to take that step until we are confident. We don't think it'll be appropriate to do so, I should say. But that's the way it plays into what we're doing.
Over to you, boss.
Okay, thank you very much, gentlemen. It was a terrific conversation. I appreciate it. Thank you very much.
Thanks, Mary.
That was one of my favorite Chair Powell speeches / I don't even know if that's a speech, like kind of question and answer. That was great. No one speaks to Chair Powell like that guy did. In a good way, not like disrespectfully, but just kind of casually, not afraid to kind of dig at him at times and say, like, okay, you keep saying you're doing this, you keep saying this over and over again. How does that reflect on the people watching? Like, nobody says that stuff. That was awesome. For those of you who didn't catch the whole thing, don't worry. As usual, they served lunch of nothing burgers, but that was interesting. It was really kind of different. What do you guys think of it? I thought it was great. Whoever that is, I never found out his name. I'm going to have to Google him. That guy is like my favorite person now. Like, he had no fear. No fear of Chair Powell. No fear of the stadium, or the podium. That was great. What a great way to kick off Friday. Whoa, not that. What a great way to kick off Friday. Trying to close this stupid screen. There we go. I think it's a phenomenal way. Bitcoin hasn't really done much. Neither have many of the charts. Little bit of downside action here, but potentially not a terrible place to look for a long position. We'll see. Bouncing off that weekly, right? Hold up. There it is. Friendly reminder, we talked about it all week, but the price to beat 69,000 flat for the week. Let's wrap it up there. I believe options expire, should be 8 UTC. I'll have to double check that for Bitcoin. And man, what do we got? We got one more. No, we got the weekend, Saturday and Sunday, and then we roll into April 1st, which will kick off Q2 on April Fool's Day. I'm calling for 100K BTC on April Fool's Day. Please don't take out position. Don't take out leverage to bet on that. But let's see it happen. It's the best day for it to possibly happen. On the day, yep, right here. 69.5, I said, might be a place for a long. Basically, it's just yesterday's open. We have very, very consistently see price return there and bounce, even if just intraday. So maybe just a scalping position back to the daily open over the weekend. 70.7. If you didn't smash the likes and subscribe to this stream, I will forgive you. Don't make it a habit. I will forgive you, and especially if you join at discord.gg/Tom Crown. Make sure you subscribe, guys. In the video description below are our sponsors and our partners. Luxalgo, our sponsor, and our partners below. Sign up with any of them, and you will get exclusive VIP access in the Discord for free. You can't buy it. It's the only way to do it. Sign up. Jump in there. Happy weekend, guys. Thanks for joining. This was my absolute favorite Chair Powell time. Till Monday or possibly this weekend. Maybe Sunday. Maybe we'll do a Sunday night, fun day night. We'll see. Time will tell. What's up, tips from Ovini? I see you out there. And everyone else who subscribed,